Well, good afternoon then, folks, as we head into US trade on Wednesday, the 26th of July. Now, it is Fed Day. We will break down the Federal Reserve a little bit later on in the video. I'm not going to touch it too much on this, kind of give an update of what's up, what's down, where we're looking heading into the US session today, which may be a tricky trading session. Obviously, you've got the Fed 7 p.m. today, which we will look at in detail in a slightly later video. But in terms of where we are at today, massive downside in European stocks. No massive kind of reason for it other than some negative earnings reports out of Europe, and obviously there's some potential for the Fed to shake things up later on, but massive downside across European stocks that has not been replicated across the board. So we obviously saw some negative data out of Germany yesterday, some negative data out of Germany on Monday, which we'll touch on when we get to the calendar. But apart from that, negative earnings, some solid downside in European stocks today. We've obviously got the ECB tomorrow, which again we will cover in another video tomorrow. But maybe expectations for the ECB to keep the foot on the gas in the midst of negative data plus negative earnings, kind of a mixture for European stocks lower, but maybe not at the pace that we have seen over the course of today maybe be expected. But apart from that, really all eyes are on the Fed as we head on to today's decision. We're expecting a 25 basis point hike from the Fed, but apart from that, we do have obviously got some earnings out last week, kicked off, and then into this week a lot of earnings reports. A number of the AI, the big stocks to do with AI. You can see Microsoft itself had some negative earnings, that the spending on AI outweighed revenue. So a lot of bets on companies about how AI can affect their companies and improve their companies moving forward. But that has not generated as much revenue as companies may have hoped so far. But obviously it's a bit of an investment for the future. So nothing too out of the ordinary, nothing too surprising, should I say. Obviously, when you take into consideration that they are preparing for the future of AI, and this is just the start. So you got to spend a bit of cash up front to get ahead of the game, and then hopefully profits will catch up. Apart from that, oil dips ahead of the rate decision. I mean, oil prices dipped on Wednesdays with investors cautious ahead of an expected Federal Reserve rate hike later and a possible increase in US crude supplies, which again will have another look at when we go around to the calendar. But oil's been up pretty aggressively lately off the back of current demand for oil outweighing future supply, with a bunch of supply cuts from the likes of Russia, from the like of Saudi Arabia and OPEC plus. We've also had 4 weeks in a row of misses on or draws on US inventory. So a decrease of supply going forward, continued demand, makes the situation for oil to pop to the top side, and that continues to put pressure on inflation, which is something the central banks will have to think of as well. But oil relatively mixed as we head into today's US trade. You can see stocks lower across the board. US stocks not too far down, but European stocks getting hammered across the board. Again, we'll look at some charts now in a minute. Reason being is obviously what we have alluded to a little bit earlier on in this video. Asia Pacific equity futures mixed, but they are not in focus today by any stretch of the imagination. Commodities slightly mixed, gold slightly higher. Not much really to see there in terms of the commodities picture. You can see oil down slightly as to what we have spoken about, but yeah, we'll look towards the chart. Bit of a pullback, putting an article to suit the narrative. It is just a bit of a pullback at the moment, so something we would keep an eye on, but really they have to give a reason for things being up or down at some point or at any point, and oil is slightly down today, so they've given a reason for that. US bonds, the yields are down across the board. Yields pretty negative across the board in terms of global bonds. Maybe a bit of a move lower into the Fed later on this afternoon. Again, we'll have a look at some charts now when we get around to it in a minute. But the US dollar relatively mixed, which is unsurprising. See the Australian dollar lower across the board. Aussie, Kiwi, CAD's obviously down with oil being down. The Australian dollar lower with equity futures being lower across the board. So that's not really unsurprising. The Australian dollar obviously has had some inflation figures out this morning as well, which we'll touch on when we get around to the calendar. The Japanese yen, bit of a pop higher on the back of stock indexes being lower and yields also being lower, proves supportive for the Japanese yen. Into the calendar, as you can see, we'll flick across to Wednesday. You can see CPI out of Australia this morning. Consensus 6.2, actual 6% lower than expected. The monthly CPI indicator pushes lower. from the previous, but still a consensus of 5.4. CPI print in terms of Q2 down at 0.8, which is more kind of normal for what they would expect. The Australian or the RBA kind of hope for about 3% inflation year on year. 0.8 multiplied by 4 is obviously 3.2, so pretty in line with what they'd be hoping for, and inflation back down towards where they would hope it, but still up 6% in terms of the year-over-year figure. It's not out of the woods just yet, but a step or a further step in the right directions in terms of Australian inflation. Apart from that, this afternoon, not too much. These oil, you can see crude oil inventories expected to be lower on this calendar. Depends what calendar you look at. Really, you can't trust these consensus until you get around to the actual figure. Different calendars have widely different consensuses on those for some reason, but we'll keep an eye on that. Maybe a beat on that somewhere positive, maybe what markets are expecting. That shouldn't influence too much, as we do have the Fed later on this afternoon. As I said, we will touch on in a bit of a later video. But IFO business climate from Germany out lower than anticipated yesterday, plus the lowest figure in 8 months. In terms of that particular number, the manufacturing PMI out of Germany really low, 38.8%, or 38.8 should I say, below 50, which is contractionary, but also massively lower than consensus, nearly 2.5 figures below the consensus, and that is a reason for substantial downside in the DAX and the Euro stocks today. So you can see the way that has not been replicated across a number of across the rest of the stock indexes. The FTSE slightly lower. Lloyd's suggesting that the amount of bad loans that they have loaned out at the moment up 76% since the last time they did that analysis, and they're kind of preparing to have to write off a number of loans that people won't be able to pay, and that is obviously a situation of higher interest rates, especially when you give out these loans when interest rates are near zero. So something definitely to keep an eye on. Lloyd shares down 3% on today's trading session, obviously due to the fact that is not positive for the banking system in the UK, and that's something that we're likely going to have to keep an eye on as we head through this period of higher interest rates. We can see the S&P down slightly, the Dow down slightly, Nasdaq down slightly, but largely sideways, lying in anticipation for the Fed later on this afternoon. You can see the Australian dollar cruising lower after the back of that weak CPI print. You can see the Kiwi pretty mixed, dollar Swiss pretty mixed, dollar CAD pushing higher off the back of oil being slightly lower. Has had a little bit of a bounce back in recent trade, but down over 1% is a bit of a reason for Canadian dollar downside in this trading session. The euro not doing too much, even though the DAX is down. Not doing too much, but also the dollar isn't doing too much either when you look at it across the board. Cable grinding higher today, but again, not really much in the way of solid price action. You can see dollar yen pushing lower in line with these yields, slightly pushing lower in terms of the 10-year yield, slightly pushing lower. Aussie yen, CAD yen, good trades this morning if you managed to get involved. Apart from that, markets are likely to be in a holding pattern as we head into the Fed later on this afternoon. So we'll break that down in a separate video, but markets likely to be troublesome as we head into today's US session. So I wouldn't go gambling your cash in today's session. Keep an eye on that Fed 7 o'clock, and we'll update further a little bit later on.